Steve here. The 4 o'clock bell just stopped ringing across the exchanges. Listen, while the retail crowd out there is throwing a party, cheering for another giant green candle on their screens, the smart money, the veterans who have actually survived a cycle or two, we're looking dead straight at the cracks in the foundation. Yes, we hit new highs today, but let's get one thing absolutely clear as we open up the ledger today.
This is a rally built on a powder keg. I'm going to give it to you bluntly, because the market doesn't care about your feelings, and frankly, neither does my ledger. The macroeconomic foundation holding up these new market highs is incredibly unstable. We are balancing record valuations directly on top of sticky inflation and total geopolitical gridlock. So let's step away from the noise, cut right through that retail euphoria, and look at the actual data.
Section 1. The Morning Ledger, the closing tape. I don't want you getting intoxicated by the late-session algorithmic green screens. You have to look at the divergence between tech momentum and macroeconomic reality. The bulls pushed the index to a new record today with the S&P 500 finishing up at 7,501. It finally punched right through that massive psychological 7,500 barrier, but look underneath the hood. Brent crude remains stubbornly sitting at $107.50. It is aggressively holding that $100 floor, completely brushing off the so-called peace rumors floating out of Beijing. Meanwhile, gold hit a brick wall. It plunged down to $4,676 as Treasury yields just continue to reset higher. And Bitcoin, well, it's the wild card of the week, stalking record territory at over 81,000 as it consolidates its breakout.
Section 2. The Red Folder, Inflation and Regime Change. Now we pivot to the hidden macroeconomic reality driving the higher-for-longer thesis. This is the stuff that retail traders are actively, willfully ignoring. I need to hammer this home. Wholesale inflation data hit the tape this morning, and frankly, it's a disaster. The PPI surged to a massive 6% year-over-year. That's the steepest rise in nearly 4 years. Core wholesale inflation is sitting right at 5.2%. Why does this matter? Because of interest rate gravity. The 10-year Treasury yield is rattling the cages right now. With inflation this sticky, the PE multiples on these massive tech giants are facing a violent valuation ceiling. You simply cannot have record valuations and 6% wholesale inflation sitting in the same room for very long. Something has got to break.
And that brings us to the change of command. The Senate just confirmed Kevin Warsh as the next Fed chair, officially replacing Jerome Powell on May 16th. Make no mistake, Warsh is a regime change hawk. I was literally just telling my old friend Milton this morning over coffee, the easy money era is dead. Done. The risk-free rate is not coming down anytime soon. The market is pricing in rate cuts that are, well, actually, scratch that. They're pricing in a ghost. It's an illusion.
Section 3. Geopolitical Ledger, the Beijing Stalemate.
Let's shift away from the domestic tape and look objectively at the physical reality of global logistics and energy markets. Time to separate the actual hard data from the social media noise. Notice how Brent crude is stubbornly holding its floor. It's holding that floor for a reason. The physical reality in the Strait of Hormuz is a far cry from what you're reading online. Trump and Xi met in Beijing today, and by all impartial accounts, the exchange was unusually harsh. They are deadlocked. Xi warned of a potential clash over Taiwan, and the Iran situation remains a total stalemate. Consequently, the strait remains blocked. Independent trackers show vital commercial supplies are being rerouted, and that is driving up global logistics costs by the hour. And worse, the power plant ultimatum deadline is passed. With zero diplomatic breakthrough tonight, that ultimatum is being re-engaged. If the strait doesn't open, the grid goes dark. That right there is why oil is refusing to crack.
Section 4. Sentiment Analysis, Bullish versus bearish.
Going into the Friday open, you are facing stark, binary market scenarios. Let's break them down so you know exactly where the battle lines are drawn. On one side, you've got the bullish view, the 8,000 target. They are betting that the momentum from today's close carries us straight to 8,000. Their entire thesis relies on a miracle deal being signed tomorrow before Trump leaves Beijing, which would supposedly cause the S&P to rip and oil to crash. On the other side, you have the bearish view, the Warsh reality. This is the bet that the market wakes up, realizes it just priced in record highs while simultaneously confirming a hawkish Fed chair and staring down the barrel of a 6% PPI. If that summit ends with a no deal tonight, $107 oil was a bargain, we'd be talking about $150 Brent crude and a violent, ugly flush in the tech sector.
Section 5. Professional Trading Directive. All right, let's move into concrete defensive trading parameters. As you look at your screens for the Friday open, I demand that you ignore the noise and watch the actual levels. The absolute key is 7,450 on the S&P. We broke 7,500 today, yes, but the volume was thin. It was entirely algorithmic. I am warning you right now, if the S&P fails to hold the 7,450 level tomorrow morning, today's breakout was nothing but a massive bull trap designed to catch late retail money. Watch 7,450 like a hawk.
Here are your directives. Number 1, keep your position sizes small. Number 2, use tight stops. Do not give this market room to breathe on a pullback. Number 3, trust the energy pits. Crude at $107 is the only honest indicator out there right now. Oil traders know the truth before the news networks do. And number 4, respect the Berkshire Fortress. Greg Abel and the Berkshire team are sitting on $397 billion in cash. They aren't missing the boat. They are patiently waiting for interest rate gravity to sink the boats that are overleveraged. Follow the smart money.
So I leave you with this question to seriously evaluate your own market positioning tonight. Are you following the smart money, or are you getting swept up in the retail noise? Because I promise you, the market doesn't wait for latecomers. Stay disciplined, watch your averages, and I'll see you at the morning bell. This is Steve. The ledger is closed.